Mary had a little loudspeaker as well. Can everybody hear me? Can anybody hear me?
I do hear you. Hello.
Right. Okay. Hopefully we're live.
Yeah,
Pick
yeah.
up to start. Hello, everyone. I hope you're well. It's
Hello.
Friday. It's Friday the 13th, so I don't know if that's got anything to do with the hiccups we've had today. We just did a test about an hour ago, Arura and
Yeah.
I, and we haven't done this for a long time, Arura and I, but it was fine an hour ago. And yeah, anyway, it always happens when you go live, isn't it? But, so, Celavi, hope you can hear and see us. The screen I've got up there is the main data of the day. Thank you, Katharina. Welcome. Good afternoon. Good evening. Hope you're all well. It actually feels like summer in London today. Out of the window here, the sun is shining, the sky is blue. Yeah, fantastic, lovely. Unlike other parts of the world today, I bet. But anyway, University of Michigan consumer sentiment, the final big piece of data for the week. It's sentiment, as it says there. It's the soft type data. The hard data this week has actually held up very well. GDP, PPI, the claims, the weekly claims yesterday, back up to 248,000. So it's confirming this sort of slowdown, this, what did they call it yesterday? Keep the phrase gradual decline, gradual softening, the professionals like to call it. But we'll come on to that in a minute. Say in 10 minutes time, we got this key final data. So you can see here from the Forex Factory calendar, hopefully, you can see we had the the expectation run into the election, the euphoria around December and January around Trump's sort of view for the consumer. And that's all sort of fallen off a cliff thanks to tariffs and the uncertainty around the tariffs. Not necessarily what the tariffs are going to yield or not yield, politically or economically. It's the uncertainty. Businesses, markets, they hate uncertainty, and that's the key thing that's been dragging on their heels. On top of that, obviously, the Fed are stuck. They feel like they can't cut. They've got the highest of the, I don't know if you can see that on the screen there, but you can see here on the main central banks that very unusually, we got the US with the highest base rates, 4.5% still. Chances are they will still cut this year, but it's been pushed out continually. It was June, July, now it's September, October range. Some are saying 1, some are saying it's only going to be 2, some are saying, well, it's not going to happen. It's not going to happen. So we'll see what happens, obviously, when the time comes around and what's happening with the data and what the hard data looks like when the tariffs have finally settled down. We had all that fuss this week about the deal in London that was the handshake that was that was the between the US and the Americans in London on Tuesday. It was supposed to end on Monday. It went for 2 days. Not a lot of detail in there as far as I was concerned. I don't know. Arura, what did you make of that Chinese US deal on Monday earlier in the week?
Hello,
What's your
everyone.
take on what we've seen on the CPI and the PPI this week as well?
Sorry. Hello, everyone. My voice is clear.
Yes, yeah, nice,
So.
clear, and loud. Do you want to introduce yourself, actually? Because excuse me, I should
Sure.
have done that.
Yeah, don't worry. Sam, I'm Ahura. We are actually we now with Mr. Stewart since 2017, probably trading as the analyzer in the financial market. And so long time, yeah, man, it's a long time. We know each other. Sometimes we work together. But what's important for me is that it's honor for me to be with you. Thanks for having me. Mr. Stewart is my. But we can say the
Pleasure's
teacher,
all
right?
mine.
Yeah. I can say that the teacher, my teacher in this business, my teacher for the market analyzing, and I learned too much and learned everything from you, man. And thank you so much. Thanks for having me again. But yeah, I'm running my company called the Economician. Means like it's like financial news and analysis network. Now, so honored that we're working with the prop trade as well. About the inflation, when we are talking about inflation and the trade talks actually, if you go fundamentally why we do have the trade talk, I totally support actually the trade. I mean, that this trade. I mean, the tensions that what US did, I totally support that. I mean, because the world came to the point that okay, let's to make it everything global, and they made it the global stuffs in the world. And then some countries like China, they take advantage of these free stuffs, and okay, now there's things free, and they started to abuse some of these free things that they got it. So that's why the countries like US, even though just like when we are talking about the trade tensions, there's so many people they bring up the talk of Trump did this. Oh no, no, man, it's not like that. Because if you remember, before Trump's got administration in the in the White House, the trade war started between the U.S. and Europe. The European they put the 20% tariffs for Chinese car, and then right after that, the Canadian did it. They did the same. So when we're talking about the trade war and trade tensions, we shouldn't blame everything on Trump. I'm not because that it's not because that I support and don't support the Trump. It's because that I support the global trades, because the global trade is something that we have to. I mean, when we have international law, we have to expect that. And when some countries do not want to expect that, oh, okay, you can just remember the U.S. dollar index from before before the corona started from like started from 98 going to 114 and come back again 101, 104, 102 again. But whatever the US dollar, whatever the Chinese yuan, I mean, the Chinese yuan is always about 6.20, 7.20. Man, it's not a business, man. It's like you're abusing the opportunities. Anyway, so about the trade talk, yeah, I support the trade talk anyway because this tension is supposed to go somewhere. I mean, in somewhere we have to end this, and we have to come to some points. When we had international trade regulations, it was years ago, and the trade and the geopolitical stuffs and the global economy was totally different. Now the world is changed. So when the world is changed, we need the new rules. We cannot trade right now in 2025 with the rules that we had back in 1970. It's not fair. So the countries they have to come somewhere to sit somewhere and make a new rules. So the straight talks is fine. But what's going on right now with them? The trade tensions. What U.S. had with the United Kingdom like 20 days ago, almost, or 30 days ago. They made some frame. They didn't had a trade agreement actually. They had a framework for that. I think the same framework we can use it for the China as well, and most probably they can make it. Most probably
Yeah,
we can make it because what they need it.
I think they said that as much on Tuesday, and interestingly, they moved the talks to London. I remember they first met.
Yeah,
Was it in Geneva or in Vienna somewhere in Austria? It's interesting that they've moved it to
yeah.
London. The unwritten word is there. So yeah, possibly it's this frame agreement. It's just the fact that Trump tweeted on his I keep saying tweeted, you know what I mean, on Truth. He sent a message out on his Truth Social network saying the deal is done in typical Trump bluster terms. And yeah, it's really a framework. There's not a lot of detail in there, but from these numbers that he was throwing out, it was 145%. Remember when he first took his card out, and now he's talking about around about 45%. He was very keen, and also again, you've got all these politicians are obviously playing to their home audience as well, and obviously in the UK. The Prime Minister here was under a fair amount of stick, a fair amount of pressure. So to do a deal with the US from a trade point of view, post Brexit, I mean the irony of it all.
I don't like your new Prime Minister in UK. I'm sorry to say that. Because
anyway.
no, because I'm talking about the economic points.
Yeah,
it's like from the economic point. Look, they bring up it's like new budget when we are talking about the inflation. Like this, the main topic of the week, inflation. With the new budget that we have in the United Kingdom, do you think that they can manage the inflation to slow down? I don't think
so. Inflation has slowed down, but he's got a big political mandate. Although he's got a big majority in Parliament, it's a very thin one. So he is trying to turn around political views. And that the spending review they announced earlier in the week was very much focused on the cause of that left wing Labour Party, the the National Health Service, but also been put under massive pressure to increase their defence spending because of Trump. And one thing you could say that Trump has done is actually on the politics of all of this is obviously shaken things up within the EU. So it's like he's like put I don't want to use the word bomb, but he's put a big a jackass under the EU, and they've actually got that off their backsides and actually got stuff done. But anyway, just back to today's data. I will come back to the CPI in a minute where we do the wrap up. It was this sentiment, really. It was this this particular sentiment, the consumer sentiment out of Michigan, that it's really sort of triggered off. But look at this: we've come in better than expected, and quite significantly better than expected, at 60.5. So from this fall off in the cliff, things have ticked. That's quite a significant uptick. That's again the White House will be cock a hoot on that number, 60. Let's have a quick look at what the inflation expectation. That's come down quite significantly as well, to 5.1%. From 60, sorry, from 6.6. That was that actually gone up? I think it might have gone up. Yeah,
it was. Yeah, so, it was like 2.6 like 3 months ago.
So that sorry, I'll put this on as well. Yeah, so you can see that obviously hasn't updated yet. That's the last one, 50. In fact, it has put the June one. Yeah. So if we put this, we go back to this one here. No, that one hasn't updated yet. That's still May's number, but you see the June one at 60.5. That's quite a significant return. You can see we're back up here, where we were in February in that first sort of just before the tariffs were announced. So we've come in for a change better than expected. You can see these expectations. It's all been weaker into that. So the fact that the hard data has sort of been holding up as the sentiment sort of front run the hard data, it's still there. However, I'd still say a big caveat, especially on the CPI data and the PPI data that we've seen out of the US this week being cooler than expected. There's two ways of reading it. The goods inflation is down, but there's some certain pockets of it that still looked quite strong. And then the service inflation, which had been holding up, has started to come down as well. So, and it's again, there's this irony. I mean, all the developed economies are service economies. Trump has focused on this idea of manufacturing, bringing manufacturing jobs, high quality manufacturing jobs, they keep calling it, back to the United States. It only counts for less than 10%. It's like 8-9% of the US GDP, and all developed economies, whether it's in Europe, Japan, or in North America, are all, manufacturing is a very small core. We are a service driven world, and that that's what globalization has done for us. But obviously, AI is just something else. It's like the fourth, fifth, depending on how you want to count it, industrial revolution that's coming along, and it's changing things so quickly and so rapidly. As with all other new technologies, the rate of change is much, much quicker every single time, and that's what we're seeing at the moment. So, for the US to try and hang on to that intellectual property rights, which remember that was the last time the trade. Well, last time Trump was in, IP, intellectual property rights, was a big issue. Hasn't really come up in this round of talks. It's all about trade. It's all about goods rather than where the big value is, and that's services, financial services, intellectual property, all those sort of areas, banking, insurance, all that sort of high level service market, service economy is where really all of the big funds are made. So we expect some move on that as well, I would guess, as we move in, if these actual physical trade goods tariffs get nailed down. But as far as the market's concerned, let's have a look at the charts, because that should be dollar positive. That's a strong data there. So let's have a look at. You still see my screen, or I'll just bring the euro up. So dollar got a bit. It's got better from yesterday today. Sorry, dollars improved today. So euro dollars come down from a blast over 116 yesterday, which was a 4.5-year high. I showed this yesterday as well. If we take this up to the actually, let's take it up to the monthly chart. There we are. So 116. We were last at 116 for euro all the way back in November, October 2021. So a 3.5-year high for the euro dollar. So understandably, we come back down today, back down to the key psychological 115 area earlier, and we've euros bounced up off that from this morning, off this afternoon so far, 115.25. We just come back to the 5-minute chart, see how the market has actually reacted to the data. It's just continued to move to the upside here at the 5 o'clock. So dollar's weakened a tad, but nothing like the 100 pip comeback it's had since yesterday's spike to the upside. So dollar sort of moving a bit on that. Sterling 135.43, again bouncing from the sell-off. I was if I go to the daily chart, I was long this yesterday. I had 7 trades. I'll go through the actual trades later on, but we were short. We were long this last night at entry. We got stopped out, obviously on the news. I can't remember how much. Pound cable. Actually, no, it actually did hit. No, stop loss. Yep. 136.70 we were looking for, but we stop loss was hit and we lost I think 70 odd pips on that one, but as it reversed there. But the trend remains very much to the upside. Here on the hourly chart, there's that breach to over the 136 area yesterday, and the big return sell-off on the news that Israel had actually attacked Iranian nuclear installations overnight. The Iranians have responded as they said they would with drone attacks. Remember last time this happened, it was all over in a couple of days. It's a bit more scary this time, given that the nuclear sites have been implicated. So whether it dies off or not, I don't know. But again, it was very particularly well choreographed, and also again, it was something Netanyahu. I mean, it's been reported here in the UK. Netanyahu is under a lot of pressure politically internally. So obviously, this plays to his core, and it plays to the strong nationalist run in Israel as well about standing up to Iran. Again, Trump said on social media in the last couple of hours, this is Iran's, it makes sense for them to do a deal, or his favorite phrase, or they will be, under pressure again. So obviously they've been hit quite significantly, Iran, with the war in Gaza as well. So and the impact that's had on them. But some significant attacks from Israel, which really spooked the markets. And we had a safe haven rally. The yen, the Swiss franc, and the dollar all rallied yesterday. 6 of our 7 trades hit their targets. There was a weakness in the Aussie, and I don't remember where all the others were, but so Aussie CAD, Aussie Swiss, CAD Swiss all hit their targets. Pound Oz hit its target. Cable was stopped out. Kiwi Swiss and dollar Swiss all hit their targets as well, and the FTSE was stopped out. So 6 of 8 trades all successful. 7 trades from last night, 6 of them successful. So dollars obviously had a lift on that safe haven bid on the back of the uncertainty in the Middle East. Obviously, the other big move whilst we're here, I'll come back to the forex market in a minute, has obviously been the oil market. US oil at 72.70 now. It's come back down quite significantly. So yesterday on the attack this morning, we went to 77.60 here at one point, so over the key 75 handle, but we quickly gave that up. So it was a big old 9% rally in the oil market, 72.70, and the daily still looks fairly nicely bid this week and the previous week. So again, uncertainty reaching that. Whether that's run out, I don't know. I mean, Haruru, where do you think that oil market could go from here? If we've breached 75 and the key 70-68 zone to the upside, US oil.
About the oil market, so we have 2 things to move the market right now. One is the economic data, and other is the geopolitical tensions. About the geopolitical tensions, I have to correct you something about the Iran and Israel conflict right now. The Iranian, they denied it that they attacked or they answered something. They didn't do anything for now. They said, they were the first news that they launched some drones towards Israel, and they denied this. They denied
All
this
right.
news, and
Okay.
they told, yeah, they did. They said that we did nothing right now, and we are thinking to what's the best to do. Probably
Right.
because that they have no other option to accept this loss.
Hmm.
Because
Hmm.
I mean, if they want to go through the war, they have to take the U.S. and even the Arabic countries around the Gulf against themselves. So that's why that's why most probably right now, for now, the Islamic government in
Okay.
Iran, they're gonna accept this loss. Otherwise, if they're gonna accept this loss, if they're gonna accept the loss of the total their regime in Iran. Anyway, about the oil market, if this tensions continues, which is that tensions continues, but with much lower probably I mean, not such a high. It's like a high in red flags, but that
Mm.
this conflict this conflict in the Middle East can continue. That's why the oil. Previous week I was thinking about the 62 and 66, this middle, before this conflict comes up. Now the oil price probably will be around the 70 and 70 70 $78, because they're gonna move these around these days, because yes, there is some I mean, the thing is that while we have some concerns over the what happened in the Middle East, but at the same time, Iranian, if they want to do something, it's so less likely they attack to the Arabic countries, or they cut the oil. I mean, transportations, because if they do that, it means that they kill themselves. That's why it's less
Mm.
likely to do that. So
Mm.
even thought, if the tensions is high, but it still is not going to affect the oil support. I mean, I was telling all this to say that that conflict, even if it continues, which is likely, but it cannot affect too much the oil supply. Maybe, yeah, it can increase the tensions, it can increase the risk in the markets, but it cannot decrease the supply. At the same time, even if it decreases the supply, we have Russia so ready there to take advantage of this market and sell their oil. So that's why we shouldn't be so much worried about the oil
Yeah.
supply.
Yeah.
And also at the same time, we have the economic concerns on the other hand. That's why putting this together, it means that oil price can stay a little bit higher, but we cannot expect that, wow, that's the war and that's going to jump above $100. It's so less likely right now. I
Yeah.
mean, nothing is, we cannot say never. That can, even if, yeah, even there is something, even if Iranian government, if this Muslim government, they attack some Muslim country, another Muslim country around the Persian Gulf, if they increase the conflict there, that can happen. Yeah, that can happen. The oil price to see about 100 US dollar. Otherwise, there is less chance for that.
Yeah, yeah. I mean, it was only a couple of weeks ago. Is it Wickoff? His golf buddy, Trump's golf buddy, that's his big negotiator. I mean, it was. I mean,
Yeah.
it was a positive spin. I remember writing it down in my diary. And it probably isn't even a couple of weeks ago, about how all the everything seemed to be going forward. There seemed to be positivity in the ceasefire talks in between Zelensky and Putin. Trump and Xi were getting on better, and even Iran. They were coming online, and everything seemed it was all going forward in the right direction. And all of a sudden, all these things are very, very fragile, and are all sort of falling apart at the same scene. We've had this like
Because
positive.
if I don't want to make it politically, but the thing is that they
Yeah,
are all connected together. You know what I
yeah,
mean? It's
absolutely. We
like,
can't help but not to. It
yeah,
is,
yeah,
especially the oil market. Yeah, I mean, you know better than
yeah.
most.
The thing is that they are all connected together.
Hmm.
Just like, look, there is something going on between Russia and Ukraine, and there is something US wants in the Middle East. So
Hmm.
there is they should between the Russia, that's why I say that there is, it's not the negotiation between the Russian and Ukrainian, or Iranian and American. It's negotiation between the Russia and US. It's
Hmm.
both about the Ukraine
Yeah,
and Iran as well. So they
yeah,
give something together, and they get. I most
yeah.
make sure that, if you remember, like just like 3 days ago, we had the phone talk between the Putin and Trump, and day after that, we had a phone talk between Netanyahu and Trump, and then the day after that, we had Israel attacked Iran. So we cannot say that's all. That's all by the chance. No, it's not a chance. They are making a deal. So
Hmm.
they are making a deal. So most probably they give the something in Ukraine to the Russians. So they say that, okay, take these things in Ukraine, these parts in Ukraine, and this stuffs in options in Ukraine, and give us these things in the Middle East. Today, the Russian once again they told that we are not going to support the Iranian in a war because we don't have such an agreement with them. So which means that, I mean, they already decided what to happen in the Middle East between this. That's why I don't see the conflict to go higher. That's why I'm thinking about the oil price shouldn't go jump like be crazy, because if that happened, just like 2 weeks ago, two weeks ago, we had a Trump travel to the Middle East, and all they made about the investment. So if they want to increase such a conflict here, everything to come for the investment is about the peace. If you don't have a peace, you don't have an investment. All what the Saudi Arabia right now they need in the Middle East, so they need a peace. So they do everything to put the peace here, but it doesn't mean that they're gonna let the Iranian regime to continue attack other countries and support the militaries, like the militias in other countries to attack to the Israel or other Arabic countries as well. That's why I think it's already decided what's happened here. The regime in Iran supports. So I think they're going to be changed, and they have nothing right now to play against other countries. So oil price wouldn't have such a big shock here.
No. I tend to agree with you, and it's interesting. We went through 75, as you see there on the 4-hour chart, but we quickly came back under 75, and that can see us going back to 70 quite quickly as well. Especially if all of these things progress, because the Russian oil has not got to the market, has it? It's got to the market via all these sanctions really haven't really impacted Putin half as much as perhaps the West was expecting, and then his oil has got out. He's found, happy buyers in China, in India, in even South Africa and stuff. So, and then they tried to the Ukrainians in particular tried to withdraw the insurance for the tankers, but they've been using rusty old hulks to get it out and get it moved around. So they find their way to the market. And it has done, and same with the Iranian oil over the years as well. So if there is a progress, it's only likely to produce more supply. And then the Saudis were talking about increasing production as well. So
connecting this data, connecting this data to the inflation, Mr. Suard. Let's connect this data to the inflation. The Trump, when we are talking about the trade tension, like at the very beginning, the people say that, if the Trump start these trade tensions, we're gonna see the inflation such a high numbers. That's why the Michigan expectations or other expectations of inflation went up, jumped up to the 7%. But that was unreal. Really, that was unreal, because when we are talking about the president, which is talking about the business, and all his cabinet, which they are the businessman, they all know what means inflation. If you compare the expectation of inflation that this administration has with the tariffs that I don't know if you remember when the reporter asked the Kamala Harris about the inflation, she couldn't even answer what means the inflation. I mean, she couldn't even explain what means the inflation. It means that this government can understand what exactly means inflation. They played with the number. You're like, the service sector is high, but at the same time, they know the service sector is high. They are not stupid. They know that they can do nothing for the service sector in a very short time. So what they did, they put the pressure on the oil market, because oil could bring the inflation down, which it brought. And they tried to bring the US dollar value lower. We saw the US dollar index less than 100 mark, which it was long time above 100 always. So that can support the inflation. I mean, that can support the inflation to bring it lower. And while they can bring this inflation lower, which we can see, if you look at the inflation, US inflation chart on the monthly progress, you can see them now. They can ask, okay, Fed, can you please now slow down your policies? That's the way that this administration is looking for. I mean, inflation is most probably can continue slowing down with these trends to go, but it doesn't mean that it's like it's going to be sort of like falling down. But holding the headline inflation around 2.2%, 2.1%, 2.4%, holding the inflation around this is very expected in the midterm.
Yeah, absolutely. Yeah, and the fact this core has come down, or this core key. Core CPI data hasn't picked up; it has fallen down. But the flip side of that, the caveat of that is, they would argue, well, we still don't know the real impact of these tariffs and what's actually implemented. There's only the steel and the aluminium tariffs and the car tariffs on Canada and Mexico that's in place at the moment. the Europeans are still talking.
Yeah.
The Japanese Prime Minister is on a phone
Exactly.
call this afternoon with Trump. I mean, yeah,
Yeah.
you mean love him or hate him, you can't say that the president hasn't been working hard or hasn't and been clear about who he's speaking to and what he's saying. So we'll see what comes out of that, because obviously Japan, huge automotive manufacturer, and obviously key to their exports. Very, very export driven economy. Japan, third biggest in the world as an individual country. So still very, very important. And that there was chatter about that deal. There's chatter about a deal with India. Obviously, the UK have put one to bed, framework agreement with the US. The Chinese have done the same sort of this week. So again, he can tick lots of boxes saying there's progress, but until we start seeing some a sort of movement in the hard data, and what the market might be is worried about, I would argue, is it could be quite a catastrophic drop, a bit like the sentiment data dropped quite catastrophically. So, and then the Fed get caught behind the curve, and whatever, we had the interest rate too high too quickly. So
checking the gold chart. Can you?
Sorry, I was just going to put the gold on. Yeah. We talked about oil.
Putting the gold chart here is looking at the gold chart is very interesting. The gold is one of the things that, one of the assets that we can understand the exact market sentiment about that. The people, because people that they are investing in a gold or they are trading. Actually, let's say about the investing, because they are making the main market, and traders, they use this trend, because that's what I believe. Investors, they are creating the trend. Investors, they are creating the markets, and traders, they use this trend. Because I don't think that the traders, they can make a trend. Anyway, the traders, they have to learn the trend, and they have to learn and understand how to use this trend. The trend, understanding the market trend. If you look at the gold price, because the people usually they invest in the gold, they are usually the more serious and more thought investors. They are thinking too much about the market. They are more serious people. They are more serious institutions. When you are looking at the oil at the gold price, I can say, okay, the gold around 3,400 right now after this conflict, which it was 3,380 before that. We can understand that still the market's expecting this uncertainty in the market. What you said, because I'm just confirming what you said about the trade tensions effect on the market, because we are talking about the tariffs, but the real tariffs still didn't start it. It's going to start after 10 days. So the tariffs.
Who knows?
We are just talking about the tariffs. We didn't have the tariffs yet. All what we had so far, it was just a talk.
Yeah, absolutely. And that, there's been some fundamental structural things that have been driving the gold market long before Trump came in and started talking about tariffs. This is the weekly chart here that's on the screen at the moment, guys. So as you can see, the November, that's April week. Where are we? Here we are. Trump came into power, or won the election here this week. Gold this week here, the 4th, and gold was struggling to get over 2,700. And here we are at we got all the way to 3,400 since then. So the uncertainty has just fueled that. However, it was already trending high, as you can see here. I say on the weekly chart. This is the 20 period moving average here on the weekly chart, and we haven't been under this big thick red line here. We've gone all the way back here to February 2024. Still 8 months ahead of Trump winning the election. So and here the 50-week moving average has only been breached once back in September 2023. So the rise of the gold market's been going on for a long time. Lots to do with central bank buying, lots of it to do with the structural changes in the gold market itself. But obviously the escalation we've had in 2025 has been added to by the continued talk about the tariffs and the continuing weakness of the dollar. And it's just everybody, wherever you are in the world, whatever type of trade you are, like you said, Arura, there's a lot of bad phrase, but sort of intellectual traders understand gold, or unless researched traders understand the allure and importance of gold and holding it as a physical asset and as bullion as well as anything else. And a lot of the central banks are doing that. Obviously, there's all the geopolitical conflict in going on in the world, and all these institutions and governments like to hold the asset as well. So all of that has been adding to this demand for gold, and it continues, and up we go. And that's a very strong trend that's yet to be booked. And there's some, given that this is the weekly chart, there's some huge candles on there. This one here at the beginning of April, this one here in the middle of May, and the one this current week on the back of the ramp up in tensions in with Israel, Iran, and obviously the situation in Gaza as well. So you can quite easily see a new all-time high that we saw in April getting pushed again, and the 3,500 level, being taken out in the short term. We'd need some major changes to this. So we'd need an end of the Russian-Ukraine situation. It would need a peace deal in Gaza and Israel. It would need, a change perhaps of regime or a change of tone out of Iran to, change all this. And then, something else might happen, because obviously the other worry is Taiwan and the Chinese.
Exactly.
So
one more thing here about the gold market.
Yeah.
This is, if you look at what happened after Russian attack to the Ukraine, we had we had the hardest sanctions ever had against one country that we had on Russia, right? But the Russian economy, unemployment is 2.6, inflation is less than 7. At that, it's just like when you are looking at, like, GDP is fine, industrial production is fine, ongoing well, it's better than many other European countries. Manufacturing production, all is fine. Even though too many companies, they left the country. I was in Russia just 2 months ago. Many countries, they left the country. Many companies, they left the country, but still the country's economy is going well. One of the things that the other countries learned from the Russia, actually the Russia, they were preparing themselves for the situation, so they started to buy. Yeah, they started to buy the gold. The gold reservation that Russia had totally supported and helped the Russian economy to overcome. It was one of the biggest reasons to overcome against the sanctions. That's something that the other countries, they learned exactly from the Russian tactics. So if you look at so many countries, if you look at the countries' interest in buying the gold, it increased too much in the last 2 years. So one of the main and biggest market driver in the gold, it was not the geopolitical tensions even, it was not the market confliction, it was not that. I'm not saying they were not important. Yes, they were important and they are still important, but things that the countries, they learned from the Russia is very important. That's why I say that even this conflict is calmed down right now, the governments, they continue buying the gold. That's why I see the gold price around 3,600 by year end, something like more than 3,600 and under 4,000 for this year, and more than about $4,000 for 2026. But
quite possibly,
because we have too many things in the market that they can move the gold price. And none of them all of them, they are open, just like they are open case. We don't have we cannot see even the lighting at the end of this tunnel. Say, okay, look, here is this conflict is going to finish. No, we don't see any light at the end of this rule. So that's why still these are the continues, and I think they can drive the gold market down. That's why I say that the gold is always buy in a dip for now. If I wanted just like put some part of my money in the market, I will put some biggest of this money on the gold when it comes down. The people that we had a webinar just 2 weeks ago about that on a weekly update, when the gold price was about the 3,100, I was telling the bodies, that's like, guys, that's the light here asking you, come and take me. Just like 3,100, amazing price when it fell around 2,100. About the 2,700 that we had just right after the Trump administration, I have to say that if you remember right after the Trump administration, there were too many talks about the inflation worries. So that inflation worries increased the US dollar index towards 110. This increasing US dollar index to 110, it put the pressure on the gold price. So the gold fell to 2,700. But later, when the people understood the consecution of the market and what's going on, the thing is changed and the gold price went back to uptrend and US dollar downtrend.
Yeah. The chart I've got at the moment, that's the monthly chart. Obviously, it's long term. Many of us trade the monthly chart, but you can see from the war started back in 2022. It's just been an absolute ram of a run for the last 2 years, the gold market, and the weekly certainly to the upside.
Yeah.
There's these structural things we've been talking about, and I say all of these conflicts, these geopolitical conflicts, would need to be would be cleared up, and even then the gold price may hang on. But at the moment, the trend is very much to the upside, and short it at your peril. Really, I would argue. And here on the daily chart, we're still consolidating at highs. We've got this triple top potentially here, but you would expect the new all-time high to be taken out before there's any cooling again. But we're well above the 20-day moving average, which sits at 3,330. The 50 days now approaching the key 3,300 level as well for the first time ever. So it's bid. It's well over 3,200. Careful shorting the gold market in the higher time frame, my friend. So let's have a quick look. So that was gold. Let's have a quick check of Bitcoin.
Bitcoin and US dollar chart, US dollar index.
Yeah, I'll come back. I haven't got the US dollar index here, but it's come down a bit. If you want to share yours, feel free. But let me just have a look at Bitcoin. Yeah. Bitcoin's obviously been hit today with the uncertainty after the Israel hit on Tehran. But again, here daily time frame, we're still supported by the 50-day moving average here. This is a potential buying opportunity at 102. One could argue. But this is a strong down candle presentation. There's a bit of a tweezer top form there, lower high from the high over 111,000 we saw at the end of May. But it still could easily turn around quite quickly, that Bitcoin market, as I said. But so we've just come down to the 100,000 levels of line in sand. It's not interestingly, the 100,000 level hasn't been a significant technical level. It was burst through here for the first time at the beginning of, or not the first time, but at May. It came down to support here at the beginning of June, and we've bounced off it quite significantly. So it's not really perhaps the technical level we thought. The much more technical levels were this 92 and 96 sort of channel we had, 92,000, 96,000 channel, which we were in for a long time before we burst out of it and rallied to this new all-time highs. And again, I've said this many times this year, there hasn't been much positive talk about the cryptos post the obviously the euphoria here on inauguration day when we got this 109,000 level sort of back in January. Sorry, this is daily time frame. Back in January, we dipped quite significantly into this 92 area, came down. We were looking at 75, and then we just rallied again. So since this low of April, when we had that the major panic about the tariffs, the stock market lows, Bitcoin has rallied like the stock market has rallied, down for 3 days currently, but still bid and very much over 100,000 and into a key support area as we speak now, around about 104,000 at the moment. There's a bit of a support area here, a bit of a channel here, which goes to 102,000. So 102, 104,000 is a support area going into the weekend and into next week and the rest of June, I'd argue, on for Bitcoin. Aruri, do you want to share the dollar index? Because I haven't actually got the dollar index chart here.
Yeah.
If you want to,
sure. About the Bitcoin, if you'll.
Sorry, do you want to still talk Bitcoin? Sorry.
It's okay. On the chart, I will show first before going to talk about the Bitcoin chart and the dollar. I'm sure. Can you see me my chart right now?
Yeah.
Okay. This is a VIX chart. Yeah, this is a VIX chart. The VIX here. Things that what we have here, we have to understand that the market risk is so high. I mean, it's increasing again, the high and increasing higher. The main reason because of this geopolitical tensions that right now we have here. And when the risk is high, the risky assets, they have a less demand, which means one of these risky assets, it's a Bitcoin and the cryptocurrencies, because the cryptocurrencies, they are the risky asset. I mean, we can classify them as a risky asset. That's why this conflict, they are not such a good idea They are not supporting the cryptocurrencies prices. On the other hand, on top of that, we have so many people, they think that the cryptos, especially the Bitcoin, is against inflation. And when you have the inflation law, so if you don't have the higher inflation, so you don't need to. I mean, you shouldn't. I mean, it's not the logical say that okay, the Bitcoin is against inflation. It's against inflation. One of the reasons that we have is the asset which is against inflation. So let's go and buy the crypto. But at the same time, you see that there is no inflation or inflation is falling down. So there's a less demand for that. That's why the Bitcoin technically is positive, but fundamentally, I don't see that much interest in a Bitcoin price right now. Most probably, if you have the 102,000, if the price breach under 102,000, most probably we're going to see again 94, 92, and 87,000 is the next targets that I see for the Bitcoin because of this main issues. Yeah, that I am thinking about it. About the US dollar index, the dollar index is very important for. I'm finding that the dollar index that we had, I had it some oops here. The dollar index, if so.
Is that the daily chart, Aurora?
No, it's 1 hour chart. I'm just like because it's in the changing it price by the day by day, because in the short term we want to understand. If you look at what happened in the bigger charts, it's like what's happened after the new administration came to the White House. This is what happened. What's happened here? The dollar index got up around 110, and now it's lowering down. The reason is that when we are talking about the trade tensions, for this administration, it's very important to see at least the dollar price lower, so they can support the economy, they can support the manufacturers, they can support at the same time to export the country. Because you see that okay, the China is putting the 30% tariffs on my price on my products. What can I do? I can take my currency rates lower, so I can overcome this tariff, so I can support my producer to support more. So that's why this administration, I think, they are interested to have the dollar index lower, and they're so happy. They will be more than happy to see the US dollar index. Fundamentally, to see the US dollar index under 100 mark. That's why this is the fundamentally what's happening in the White House, and generally there to see the dollar index. But from the technical levels, I can say that right now, what we have right now, in a short, let's make it in a 4-hour chart. The 4-hour chart can see much better to us. In a 4-hour chart, we can see still there is a pressure on the dollar index under
Absolutely.
under the main moving averages. Technically, also we can see the pressure on the dollar index, but I don't think that this technical. If let's have the trend lines. Oops.
Again, it's that you're right. That's what they sort of, they don't want it too weak, but they want
exactly.
It was overvalued. Many are arguing, and there may be still some more legs in this. We're only in the second week of June. There's still over half the year to run, so we could still see some more weakness in the dollar. Anything over 100. On the dollar index is a very strong dollar. Obviously, exactly. The dollar index itself it's a bit of a skewed view of the dollar, because it's predominantly, there's only 6 currencies in there, and predominantly it's the euro. The euro accounts for over 56% of it. So we've got a strong euro and lots of inflows into European stocks in particular. But value from a value point of view, because now that the US stock market is back to the S&P's been back over 6,000 this week, we have relatively highly valued US companies compared to other parts of the world, and obviously the DAX has had a good run, but. Anyway, we're going to wrap this up, guys, in the next 5 minutes or so. So if there's any particular asset you want us to have a look at, please let us know. But we'll have a look. I'll just do it. We'll do a wrap of the week. So the main news of the week was obviously the weaker inflation data here out of the United States on Wednesday, 2.8%. The core 2.4%.
Sorry, I shared something on a chart. I probably,
All right, okay.
yeah, yeah. I wanted to I wanted to say that just like put the, I mean, to bring the traders and investors focus on the inflation trend in China as well. This inflation trend in China, because we cannot talk about the U.S. inflation without having the idea about what's going on in China. They are these two fierce biggest economy in the world, and they are so connected together. So I think they're looking at the Chinese inflation numbers. It says us that when you have the prices lower in China, when you have the cheaper export to the U.S., because the U.S. is one of the biggest, I mean, not one of, it's the biggest exporter to the United States is China. And it's when the Chinese price is lower, when you are exporting the prices with the lower goods with the lower prices. So it means that the
Yeah.
buyers in United States, they can have these prices lower, so that can also support the inflation law. So I mean, when we are talking about the U.S. inflation, we shouldn't. I mean, that's the only thing that I wanted to mention here. That it's very important to don't forget about the Chinese inflation. These numbers are very important for investors and traders. They have to follow that very carefully.
Yeah. The only caveat I'd say about all the Chinese data we get, remember, it is a communist state. The government rules everything. So even private institutions, private universities or whatever, they can't really say, anything that's massively anti the Chinese state. So always always make sure you take that with a fairly healthy pinch of salt. But yes, I mean, there's obviously weakness. It's the world's second largest economy. It will overtake the United States just on a pure numbers basis at some point, probably in my lifetime, certainly. From a sort of growth of the economy point of view, just the amount of money and the way they spend it on their infrastructure. But still, if you look at it per capita, obviously there's 1.3 billion Chinese, there's 400 million Americans. So per capita, they're still a very middle income country, poor country. However, they are producing some very, very clever people very, very quickly. And, what we saw with in this AI boom is absolutely classic of that. They're copying what NVIDIA thought they had this massive lead, and ChatGPT, OpenAI, and the Chinese came out and produced this thing much, much more cheaply with less power and less computer grunt. So that's upended a lot of the valuations of many of the US companies. But anyway, that's obviously a long-term thing. What I was saying was, I mean, the main news this week has been the weaker US inflation, the weaker PPI. The other key numbers I was watching this week has been this number here. This looks like the jobs situation we said earlier is showing, the waning, the cracks might be getting a bit wider, because I mean the chart that really caught my eye this week was this claims one. We talked about it last week, last Thursday, when we talked about it. If we just ignore the last 2 weeks, this bounce up to 240,000 on the weekly for the unemployment claims has always been bought back. So this was this number here took us back to December 2024. So throughout this year, it's always remained very, very strong. The US jobs market it's around about this 220,000. We bounced here to 240,000, and then last week, was this a one-off? Well, no, it wasn't. This week, we've gone up to 248,000 again, so it's higher than expectations. The CPI, on the other hand, if we go look at the CPI, it's the other way around. We're undershooting. We're it's difficult to tell that, but these are the expectations. The actual has come in under forecast. So inflation is going down, jobs are going up. So that's why the Fed are stuck about where they can cut. Things are not as bad. Remember, they keep talking about it being transitory. Any particular spike in inflation in the US. So I think a lot of data is still to come. So I'm still very much on the sidelines about the tariff impact, and I'm still personally, for what it's worth, I still think there could be some pain to come for the US economy. We'll see if things are going to be like that as well, and there could be quite a significant rise in this unemployment number and claims numbers, and also the non-farm payrolls could deflate quite quickly. But again, some are saying that might not be as negative as many expect. But certainly coming back to today, the consumer sentiment was much better than expected. It's I would guess stock markets have bounced on that. They are been open an hour and a bit. This cash market. I'll just look at just use the S&P. Yes, so the overnight the worry about and the attack in Tehran took the S&P to 5925, and we're back to 5988. We are still shy of 6,000. We had one spike today earlier on the data, and we're under it. So if we close over 6,000 tonight on the S&P 500, that will be a positive day and a positive week. But even at this 5990 level, it's been a relative sideways week if we look at the daily time frame again. So stocks are still holding up around about this 6,000 level. So where do we go from here? We need some more stimulus, some more news. And I say, just to wrap up, we've been talking for an hour now. If we look at next week, we get into the third week of June. We are now starting to move into the summer season full on.
Wow,
and
this week is going to be a crazy week.
And things
it too much. I like it too
things
much.
Might start to calm down, but we'll see. Let's just run through it from the top of the shop. So Chinese data over the weekend and again on Monday. Inflation, housing data out the UK. On Monday. Actually, just bear with me. Let me just use Forex Factory calendar because it's easier to apply that.
Until you bring the calendar, the main focus next week going to be on the central banks. I mean, next week going to be the central banks week, and that's going to be
but it's what they actually can do in the moment. So first up is the Bank of Japan. As I say, the Prime Minister is speaking with Trump this afternoon, apparently. Obviously, the relationship between the politics and the central bank in Japan is probably the closest of all the major economies. So we'll see what comes of that. But no change expected from the Bank of Japan on Tuesday. Sentiment data from Germany also on Tuesday, and then we got the retail sales out of the US. On Tuesday as well. We'll be live for that. Inflation data from the UK kicks off Wednesday. And then we've got later on, we obviously got a bit of a non-event FOMC, to be honest, isn't it? They start their meeting on Tuesday. What can they say? What is, Aruru, what do you think you might say on Tuesday?
They said what you said. They said everything what they have to say, and they did everything what they have to do. It's one of the very, few times that I can say that even the CME group has a 100% chance of no rate cut. Sometimes that can be a joke for the Fed expectations. 100% no. It was. I couldn't see that. I saw this 100% is like 2 days ago. Maybe there is a little bit chance right now. What?
97% next week. Yeah, there's absolutely nothing happening. And even July is, it's still 77%. So it has really pushed out now to September before we see any, even that's 50 a chance of a cut happening in September if the data doesn't. Can you see that? Can you see my screen? Sorry, I've flicked off.
So
you're right.
But in UK we will have a rate cut.
I think they need to. But you're right. It's very. It's still a high impact event. We'll still be live next Wednesday for that here, but not a great deal of really market moving news on that. Thursday we got the Swiss National Bank and the Bank of England as well. The Bank of England are likely to move. The more fun really is the Bank of England because of this big split we see on the MPC committee. The big 7-2, 8-1. It might be 4-5 this time. So that's a bit more joy there. Remember sterling's rallying 3-year high against dollar. The weaker dollar. Stock markets just shy of all-time highs this week. Interestingly, I stopped. I'll finish with a chart, my FTSE chart actually, because it's a classic traders chart. The FTSE chart. We were in a few points of hitting our target yesterday, and then all of a sudden overnight, because of what's happened with Iran and Israel, we turned around completely, went crashing through our entry, and ended up getting stopped out. And now where are we now? We're back through our entry and heading back up again. So that's trading for you. and I'll show you that chart in a minute.
Generally, the next week for the London, it's going to be a quite positive stock market. I mean, the stock market in the UK is gonna be the quite positive. I think we can count on bull market mostly in Europe, but mostly in the London.
Yeah, and then Friday next week, the Philly Fed manufacturing core sales from Canada and retail sales in the morning out of the United Kingdom. So quite an interesting week next week. Central bank has dominated. No chat, obviously, now they're in this lockdown period. But as I say, let me just finish with my with the FTSE chart, which just shows you traders what can happen or what does happen in trading. It's just sod's law sometimes. So let me just put the hourly chart on. There we were. This was yesterday. This trade was taken here on the 10th. So we drifted lower. We so we were close to the stop loss, but we didn't. We rallied. There we are, within a few points of my new all-time high here. 8,903 is where my target. We just didn't quite get there. We got just shy of 8,900, and then overnight, and there we go. I was stopped out within, again, just with a few points. But that's what happens. And where are we now? Well, last time I looked, we were actually over here. We were looking back up to our target, but we haven't reversed. So, well, that's trading, I'm afraid. And if you can't cope with this sort of thing, up and down within points of your target, you shouldn't be in the market. But, if you've not got an account with us, why not, is my question. It's very straightforward. We are theproptrade.com. There's 2 and 1 step challenges. They're very simple to understand. We're very open. We're very transparent. Our most popular challenge is the 2-step standard challenge. And for a few $100s, you can get yourself quite a hefty $25,000 or $50,000 account. $50,000 account start at $345. If you are new to us, if you put in new 25 here, we've currently got a coupon which gets you a 25% discount off the challenge price. So it brings it down to under $260. If you want a smaller one, $25,000, $130 gets you the $25,000 account equity. Stick to the rules, because that's one of the huge benefits of the prop trading companies, and something we push here at theproptrade.com. You've got to trade in a sensible, grown-up way. So you're looking to make 8%. Your maximum loss is 10%. You can't lose more than 5% a day. We don't like you risking more than 3% per trade. There's some of the rules that sit in there, and it just makes you a consistent and disciplined trader, a patient trader. And that's, most people blow their accounts, whether it's a prop trade account, whether it's a CFD account, whether it's a futures account, because they're not disciplined enough, not patient enough. They don't use any risk management or money management. With the prop trade, we've got these rules you've got to stick in. And then once you've done that, you've proved it to yourself and to us, you get your funded account, and then, a week later, you could be having, 80% of any of the money you've made is yours in real dollar terms. So 80%, 20% profit share, 90% with some of our other accounts as well. So give it a go. We're here to help, and we do these lives every single day. Thank you, Aurora. It's been a pleasure. We've chatted for far too long, no doubt, as usual. But that's trading for you. Have a great weekend, everyone. Aurora, thank you for your time, and I'll see you all again next week, everyone.
Yeah, sure. Have a good time. Bye-bye.
Take care, everyone. Good night. Bye-bye.
Bye.